Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 13th of June, 2023. Thanks for joining me for episode number 2482. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. What we have in front of us here is the Convergent Trading pre-market summary sheet. Today, the key news, of course, is the US CPI that just came out. The inflation rate year on year for May came in at 4% better than the 4.1% expected. The forecast was 4.3. The consensus is 4.1. The prior is 4.9. The Fed is achieving its, I don't know, is it a soft landing? It seems like it, despite all of the screaming and shouting of all the macro analysts. The Fed seems to be on track here. Uh, Equities rising, inflation going down, treasuries reflecting these changes. The month-on-month inflation rate came in at 0.1%, expected at 0.2%. So overall, the market has a risk-on bent. It has become more so since the release. NASDAQ leading the pack with a 93 basis point increase, 138 points currently. The core's in line. The other news that came out this morning out of Europe is the Great Britain claimant count came in at negative 13.6, pretty strong there. The expectation was plus 22,000. Remember, lower is better, claimant count. Unemployment rate 3.8% out of Great Britain versus 4.7% expected, 3.9 prior. So more good news there. The zoo out of Germany, a really important economic sentiment indicator, was expected at negative 13.1, came in at negative 8.5. So much better. The prior's negative 10.7. And what's left for today, we have Governor Bailey, we have Yellen at 10 o'clock. We have Cleveland CPI, not so important, and an 18 billion 30-year bond auction at 1, and crude oil stock change after the close. The volume in the S&P, so we're over here now. The volume in the S&P quite strong this morning. 247,000 contracts, well above what we've seen over the last few sessions by this time of day. So it's the market's certainly been waiting for this, and it's popping higher. We pushed yesterday's high. This morning, we're trading above the 4,400 century figure in the S&P, and the inventory is 91% short. There was a little bit of trading that took place after the release. Let me verify that. Yes, after the release, it dropped down to 43.81. Really set up a nice long at 43. The prior settlement 43.88. Hard to catch that before 43.90 for a run to 44.07, a naked point of control. We'll go over that in a minute. The point of control is at the century figure 43.97, and again the high is 44.1375. So that's what we've got for today. Crude oil spiking higher, up almost 3%. Crude was well on its merry way of pushing a little bit higher a few days ago, and then it decided to just kind of puke them out and drop. So I'm having some data issues this morning. My profiles aren't coming up. I've had to switch to IQ feed. The roll just does a number on data, and so I'm struggling with it here. Unfortunately, I'm having to start from home, and that's why I'm not as well equipped. Here's what we've got in the S&P. This is what we've got in the S&P. We've broken out of this big range. We've talked about this quite a bit over the last couple months. This huge range here that started sometime in March. We broke out. We still have a naked gap here, an open gap. And what we've done is we've kind of traded sideways. We had a slight downward skew. I covered this all of last week. And then we finally broke out on Friday. And then yesterday, we managed to open test down. Really, yesterday was a very, very tough trade. I mean, it sat sideways until about 11:30 Central, 11:40 Central, which is 12:40 Eastern, right smack dab in the middle of lunch. And then all of a sudden, we got a volume spike, and we took off to the upside, and we ended up finishing at the high and settling at the top of the range. We didn't manage to move the point of control higher yesterday, but we did leave single prints below. We have a really nice structure down here into the prior day's high of 43.70, 43.69.50. Really nice weak structure in there. So any move down will target 43. Oh, it's a good one. It's a good one. Yes, it's a good one. 43.70 becomes really important here to the downside, and then beyond there we get down into the prior highs, and this is adjusted for September. Again, we're quoting and trading September. The next level down would be 43.49 or 43.50 down here. So 43.50 is the next area down. Above us, we've cracked through the 4,400, and the next big area is the all-time high, or the most recent high, which is, hang on, for some reason I've lost my composite. Let me pull that up. Composite chart. It's on the NQ. All right. Sorry about this. Data. So here's what we've got. Let me float this chart. Now this chart has a lot of details, so I'm gonna, I'm gonna remove the noise, so to speak. Here we go. So this is back adjusted. Okay, so this is a properly back adjusted chart, and you can see the next big area above is 44.56.50. 44.56.50. So we've pushed through the 42.30 area, which held right back here, right there. We've squeezed through the next high of 43.35. We've pushed through to 4,400, and we're making our way back to these most recent highs from 2021, actually late 2021, December or so, or January 2022, something like that. Really big areas being checked right now. On an earnings basis, we're trading at 44.14 here currently. On an earnings basis, with forward guidance on earnings, the market can probably justify 44.50. And on a macro perspective, just looking at earnings and so on, and how institutions think 44.50, above 44.50, it becomes a little bit tougher to justify the pricing at that point. So that's what we are looking at. Again, the profile shows weak structure from yesterday. We just blasted higher. Here, let's look at this. Just blasted higher yesterday. Man, what a pain this is. This has been loading forever. On the release today, it dropped pretty strong, and then it pushed back to settlement, pulled back into the lower zipper. Look at that zipper. What a beauty, right? This zipper right here, man, I can't even draw on this. What a beauty there. Pulls right into the zipper and then launches off into the 4,400, taking out the prior high. This is an impulse push, and this is this thing with volatility. When you have higher volatility have a much cleaner market, in my opinion. And volatility's been dropping off pretty strong. But look at where it pulls back to the session mid, the blue here, the blue line's full session mid, pulls right back into the session mid before we get the continuation, and that's a setup for me. Pull back to this 43.95, looking for the high that was put in this morning at 44.06.07, and then anything beyond here, which is right now, is considered gravy. So here's what the CPI looked like. This is a full session ES chart. Again, it's back adjusted. I don't have the profiles on here. Unfortunately, this thing is struggling to keep up right now. It's a lot of data that I'm downloading. But, we're seeing the same in the NQ. The NQ's, oops, hang on. Still on the drawing mode. The NQ had a bit of a pushback into settlement and then used settlement to base off of and continue higher. The NQ took out the 15,000 yesterday right after the close and is well above it now. So to me, it's all just pointing upwards. One thing you want to look at is the Fed fund futures. Fed fund futures are pricing in a 100%. You don't see this often. A 100% probability of the Fed pausing tomorrow. Now imagine if we were wrong, if these guys were wrong. But the target rate is set at 500 to 525. The current target rate's 500 to 525. So they're expecting a pause. We had about a 25% probability into late last week. And even yesterday, we had a 79 to 21% probability of pausing. Last week, a week ago, 78 to 22, and a month ago, 84 to 15, 85 to 15, and now it's 100%. So tomorrow is kind of seems like the market is saying it's a lock-in that we would pause, and we're kind of pricing that in already, so I'm not too concerned about it. We'll see what it does once the Fed announces, but to me, it just looks like the market has already priced all of this in. Oh man, this thing's making me log in. Just 1 second. I'm struggling with a cold right now. Dealing with a cold. Verify, yes, approve. Okay. I'm looking at the roll. We want to look at the pace of the roll. The roll is very much lagging. Here's the pace of the roll for the ES. It was very much lagging yesterday, and it's caught up pretty good. It's still at 56% versus 69%. Generally, we're done with the roll. If you follow the blue line, the average, you'll notice that the average, by the time the expiration gets done, you'll notice that it says 78%, or anywhere between 84 and 68% of the open interest actually rolls. And so we're expecting 78% to be done, and we're at 56%. Normally we're done with that by Wednesday, by tomorrow, but there's just a massive lag here in the current roll. So very important service, this chart here by the CME. The Nasdaq. Come on, let's switch. No, won't switch. It's kind of been acting funny actually. Yeah, all right, well, won't do it. So that's where we are. So let's talk about today. So today there's just zero indication that we want to get short, right? So we're looking at this thing and it's just not looking so hot for the shorts. We're opening in a gap this morning at the 44, above the 4,400. We settled yesterday at 43.88, so I'm going to keep this really simple for myself, hopefully for you, and that is Today, it's about looking for the gap response. How do we respond to the gap this morning? We do have big news in the CPI, but do we get responsive sellers this morning, bringing it back into settlement, which gives us a gap to settle trade, or do we have a consolidation, an open auction that consolidates for a bit and then starts launching off? But there's nothing here that tells me that I should be short or should be stalking short. The market needs to show that. So in other words, if we're opening up here, an open auction that resolves to the downside with an impulse and has a weak pullback. Again, the impulse itself is not enough. I need to see a weak pullback. A weak pullback. Look for an area to trade against, maybe the OS low, VWAP, RTH VWAP mid, something like that. Look for the pullback for a gap to settle trade, and this will be your target right here. And then if it gets in here and doesn't hold, then remember the 70 becomes your next key target below. So we're looking for 4400, 4402 to 70, and then likely sideways into the rest of the session. That's one scenario. This is just me looking at whether if it sells. There's nothing here telling me that it's it's likely to sell. In fact, let me just change colors here just to avoid the confusion. The secondary scenario is an open auction that moves back, puts in a wide opening swing here, consolidates, and then finally breaks and pushes higher. In that case, I'm aiming for 44.50 as a key objective above the mid-century figure. That pushes us into the level that we've seen that I showed earlier in the composite. There it is, 56.50, right in here. This is from last August. But other than that, that's all we've got. It's a gap situation on news. So we have an SOC. The SOC for the CPI is around 43.94, 43.94.50, something like that. So the market, the auction was interrupted at that point, but the auction up to that point was such that we were pushing higher anyway. So you can see here from the reopen right here at 5 o'clock Chicago time, pulls back to settle, and we've had an upward skew anyway, which was disrupted by this CPI release. And so we've pushed quite a bit. We've gone quite a distance here. So the question becomes, what do we do with the gap? And that's it. That's it. The skew is towards longs. Of course, the trend is your friend kind of thing. But if it does fail to continue, it creates a pretty strong opportunity to the short side. But I'm going to warn you that shorting this thing has been pretty rough going. So that's where that stands. Taking a look at the other products, that the NQ is in the same spot. The for crude, if you recall last week, crude had spiked up into the middle of the range. Crude has a mid and the most attractive price in crude is 72. It had this spike higher, took out the prior weekly high, and it pulled back. And my expectation based on the action is that it's very likely to retest this spike and get back into 74. And what it did that day was unexpected. Right here, immediately sold off, and it sold off to the tune of $4. $4 this sell-off. I actually scanned for news and so on, news flow. And then since then, this spike down, this massive impulse down, since then it has done nothing but continue to sell off, and it's seeing a bounce here. It's pushing back against the spike low. But to me, or last week's low at 69, and it's no surprise that it's struggling in here. Any extension down on the second bracket, so once 8:30 hits in Chicago, 9:30 Eastern, if we extend below the 68.74 here, if we extend the first bracket, if the second bracket extends the first bracket's low down, then my skew is going to be to the short side in crude, looking for it to move back towards the 68.20 or so. We left a double distribution profile yesterday, so I'm looking for it to kind of push right back against the full session VWAP, full session mid, and this high volume node in the 25-30 area, 68, 25, 30 area. So if it extends the second bracket below the first, if it holds in the middle and starts breaking the first bracket, then what it's doing is it's taking back the low that it had put in last week, and it's likely to now strike the high, and we're looking for 70s in that situation. So if it continues through 69.27 in the second bracket, then I'm looking for 70s to the upside in crude. I'll leave you with that. That's plenty to cover. Thanks so much for tuning in. Sorry about the technical issues, but I got to work with what I have. Good luck, and I'll catch you tomorrow. Don't forget to subscribe to the channel and hit like when you can. Take care.